Hey there, ready to outsmart inflation? You're not alone. We're diving into your video about tackling inflation head on in 2024.
Hmm.
And get this, we're not just talking about clipping coupons here.
Right.
We're going deeper, uncovering how to potentially thrive, not just survive when prices are going haywire.
Yeah, it's about getting proactive and understanding that inflation isn't just a blanket statement.
Right.
It impacts everyone a bit differently.
Right,
Yeah.
exactly. It's like we all know a latte costs more now than it did a few years ago. But what really hits home is when rent and groceries, those everyday essentials, start creeping up too.
And that's where understanding the why behind the what becomes so important.
Okay, so let's break it down. What causes those prices to jump in the first place?
Well, it's a bit of a balancing act. Increased demand can fuel inflation, kind of like a bidding war for goods and services.
Hmm.
Then there's the rising cost of production itself, materials, labor, transportation. And, of course, government policies like monetary policy can also play a role. Even consumer behavior plays into it. It's fascinating, really.
Okay. It reminds me of the supply chain disruptions we've been hearing about.
Right.
One little snag can impact prices across the board. Speaking of history repeating itself, the video mentions something called stagflation, comparing it to the 1970s.
Right. Stagflation is essentially high inflation, coupled with stagnant economic growth. A real double whammy.
Yeah.
And, the video brought up a really important point. This kind of situation can disproportionately impact people depending on their income levels.
How so?
Think about it. If you're living paycheck to paycheck, and a big chunk of your income goes towards basic necessities like housing and groceries, those price increases hit you much harder than someone with more financial wiggle room.
That's a really good point. So it's not just about tightening the belt across the board. It's about being strategic about where your money is going.
Exactly. The video actually challenges the traditional advice of just cutting back.
Mm.
It suggests that during times of inflation, you might want to consider assets that act as inflation hedges.
Inflation hedges. Okay, you're going to have to explain this one. What does that even mean?
Sure, think of it this way. As inflation rises, the value of your cash sitting in a regular savings account actually decreases. It buys less over time. Inflation hedges are assets that have the potential to retain or even increase in value during periods of inflation. It's about looking beyond just saving to potentially growing your wealth even as prices climb.
So what are some examples of these inflation hedges?
Two of the big ones that often come up and that this video emphasizes are real estate and commodities.
Okay, I'm intrigued. Let's start with real estate. What makes it such a good hedge against inflation?
Well, one key factor is that land is a finite resource. So as the population grows and the demand for housing increases the value of that land, and the properties on it tends to rise as well.
That makes a lot of sense. Scarcity definitely drives up value. And you mentioned rental income, too. As a homeowner myself, that part caught my attention.
Absolutely. When inflation is high, landlords often raise rents to keep pace with rising costs, which can provide a hedge for their investment. Now, the video also highlights commodities as a potentially powerful hedge. Think of it as owning a piece of what keeps the world running.
Commodities, okay, break that down for me. What exactly falls under that category, and why are they considered good hedges?
Commodities are raw materials, the essential building blocks of the global economy. We're talking about things like agricultural products, your wheat, corn, coffee, energy resources like oil and natural gas, even precious metals like gold and silver.
So instead of investing in companies, I'm investing in the raw materials themselves.
Exactly. Now, here's why they can be good inflation hedges. When the cost of everything else goes up, so does the cost of producing these raw materials. Transportation, labor. Those costs rise with inflation, which can drive up the price of the commodities themselves.
So if you're holding on to gold, for example, and the value of the dollar is declining theoretically, your gold is becoming more valuable.
You got it. Now, while real estate and commodities have historically performed well during inflationary periods, it's important to remember that every investment comes with risks. There are no guarantees, right? That's why the video emphasizes that this isn't about putting all your eggs in one basket. Diversification is key.
That makes sense. Don't put all your eggs in one basket. That's classic investing advice. But in this case, it sounds like it's not just about diversifying within the stock market, but diversifying the types of assets you own. But before we get too far into the investing weeds, the video didn't completely ditch the budgeting talk, did it?
Not at all. In fact, they make it very clear that budgeting is like that solid foundation you need, especially during shaky economic times. But it's not about deprivation. It's about getting smart and strategic with your money.
I loved how they focused on prioritizing needs versus wants. It's so easy, especially these days, to spend mindlessly on things we don't really need.
Exactly. And that's where something like the 50-30-20 rule can be helpful, which they touched upon.
For those of us who aren't familiar, what is the 50-30-20 rule all about?
It's a simple framework for budgeting. The idea is to allocate 50% of your after-tax income to essential needs, like housing utilities, groceries, and transportation. Then 30% goes towards your wants, things like dining out, entertainment, travel, the fun stuff. And finally, that remaining 20% is dedicated to savings and debt repayment.
It's like a reality check for your spending, but it still leaves room for enjoyment.
Exactly, it's all about balance. And speaking of taking control, the video had some really insightful things to say about diversifying your income streams. Now, this isn't just about getting rich quick. It's about creating a safety net.
You're speaking my language. Side hustles have always intrigued me, but it's never felt more relevant than now with so much economic uncertainty. What are your thoughts?
The gig economy has opened up a world of possibilities. Whether it's freelancing in your field, turning a hobby into a side hustle, or even driving for a ride-sharing service a few hours a week, there are more ways than ever to create additional income streams.
Okay, so let's say you pick up a side hustle. What's the best way to use that extra income to combat inflation?
That's where your strategy comes in. You could direct that extra cash flow towards those inflation hedging investments we discussed, like gradually building a real estate portfolio or adding to your precious metals holdings.
Or you could use that extra income to bolster your emergency fund, which is always a good idea, especially when prices are unpredictable. It's like building that financial cushion to fall back on. But it strikes me that the common thread here throughout all of this is knowledge. Like, how do you even know where to start?
Yeah, the video really hammers home that information is power. The more you understand about how the economy works, the different types of investments, the more equipped you'll be to make those smart financial decisions.
Totally. But with so much information out there, it's easy to feel overwhelmed. Where do they recommend going for reliable economic insights?
They suggest checking out reputable financial news sources like Bloomberg, the Wall Street Journal, CNBC. These outlets provide those up-to-the-minute updates on market trends, economic indicators, and you can often find analyses from respected economists.
That makes sense. Those are the usual suspects for a reason. What about government websites? Are those helpful too?
Absolutely. The video specifically mentions the Bureau of Economic Analysis and the Federal Reserve as fantastic resources for those big-picture economic data and reports. They might take a bit more time to dig into, but they give you a solid understanding of the overall economic landscape.
Okay, so you've got your financial news, your government data, and then they bring in something I really appreciate, the power of community.
Yes. Engaging with others, sharing knowledge and experiences, it can be incredibly empowering. The video encourages seeking out opportunities for discussion, whether it's through local workshops and seminars or even online forums dedicated to financial topics.
It's like that saying, you are the average of the 5 people you spend the most time with. If you surround yourself with people who are financially savvy and proactive, it's bound to rub off on you.
It creates that sense of support, too, knowing you're not alone in navigating these challenges.
Hmm.
And I think that ties into the video's final point about adaptability.
Right. They emphasize that the economy is dynamic, always in flux. What works today might not work tomorrow, so we have to be ready to pivot and adjust our strategies along the way.
Exactly. Regularly reassess your financial goals, your investments, even your budget based on new information and changing conditions. Stay flexible, stay informed, and you'll be much better equipped to weather any economic storm.
It's almost like a mindset shift, right? From feeling overwhelmed and helpless to feeling empowered and in control.
Precisely. And that's what I appreciate most about this video. It's a message of empowerment, reminding you that you have the ability to take control of your financial well-being, even amidst uncertainty.
Well said. So for anyone listening who might be feeling a little anxious about the whole inflation situation, remember this. Knowledge is power, community is key, and adaptability is everything. Take it one step at a time, stay curious, and don't be afraid to ask for help or advice along the way.
Couldn't have said it better myself.
And on that note, we'll wrap up this deep dive. We hope you found these insights valuable and feel inspired to take control of your financial future.
Until next time.